how much does it cost to sell your home? Well, that's going to be the subject of today's video, and we're going to get started right now. Hi, my name is David Matney with Nebraska Realty. I'm a local realtor here in Omaha, Nebraska. Now let's jump into today's topic. As a seller, what are the costs that are involved when you go to sell your home? Let's talk about the elephant in the room first. Let's talk about commission. When you sell your home, commissions are negotiable. There's no such thing as a standard commission. In fact, if all the real estate companies got together and said, hey, we're going to establish a standard commission, well, that would be a violation of the SHERMAN Antitrust Act. Now, real estate agents are independent contractors. They're paid straight commission. There's no salary. There's no hourly wage. There's nothing like that. The only way for an agent to get paid is by having a deal close. Now, when you hire an agent to sell your home, you want to look at the entire package. You want to look at what they offer in terms of their services, along with their experience level and their track record. Now, when you hire an agent to sell your home, the commission actually gets split between four parties: the listing broker, the listing agent, the buyer's broker, and the buyer's agent. Now, how does that actually work? Now, what's going to happen is the listing broker is going to advertise the home on the multiple listing service, the MLS. Now, on the MLS, the listing broker is going to agree to pay any other member of the multiple listing service a cooperating commission to anybody who brings a buyer to that particular listing. For example, let's say I list a home for sale. My broker, Nebraska Realty, will advertise that property on the multiple listing service, and they agree to pay a commission to another broker, anyone who's a member of that MLS, a commission for bringing a buyer to that listing. That way, what happens is it incentivizes other agents, regardless of firm, to bring a buyer for my listing. Now, many sellers have the impression, well, it's like, hey, you know what? I'll just sell it myself and save the commission. Well, believe it or not, sellers who hire an agent will actually net more money at the closing table. And here's why. Number one, they're going to get more exposure. And number two, the deal's going to close faster. Now, remember, real estate agents are not created equal. And companies do not sell real estate. Agents do, based off their activities and their skills and their experience. Now, in 2014, the National Association of Realtors reported that 87% of all new agents fail after 5 years in the industry. Now, if you decide to sell your home, you want to at least interview at least 3 different agents, and they can be from the same company or different company, because again, real estate agents are independent contractors. You want to find the agent that best suits your needs. Now, don't feel pressured to sign with any agents. This is a big decision, and it's okay to take your time. You should ask for a copy of their resume, their track record, and a list of past clients that you can call as like references. You also want to check out their presence online. Look at their reviews on Zillow, and hey, if they have a YouTube channel, check them out on their YouTube channel. Now, again, commission is going to vary because commission is negotiable. Paying more in commission does not necessarily mean you get better service. And paying less in commission doesn't necessarily mean you're saving more money. You want to make sure that you strike a balance between the two. The next expense is going to be paying off your existing loan balance. Now, keep in mind, when you go online, your payoff might be $150,000. However, your actual loan payoff will be slightly higher. Now, because your payoff amount actually includes interest due as per the day of closing. So a lot of sellers, what will happen is they'll see their balance be $150,000, but then when they see their closing statement, this closing statement is going to say $151,500. So your actual loan payoff will be slightly higher than what your existing loan balance is. So just be aware of that. Now, what's nice is when you hire an agent and a title company is involved, the title company will arrange for that existing mortgage to get paid off at closing. Now, in the state of Nebraska, the seller will have to pay a state documentary tax. This tax is paid by the seller for executing the deed for the privilege of transferring legal title of real estate. This tax is $2.25 per $1,000 of value. And by state statute, this tax must be paid by the seller. Another expense in Nebraska is going to be title insurance. Now, this is usually split between the buyer and seller, and the amount of the title insurance policy is based on the purchase price. For example, a $300,000 purchase price, title insurance will run you around $1,100, and that'll be split between the buyer and seller. In addition to title insurance, the title company will also have a escrow closing fee. Now, this will be somewhere in the neighborhood of $300 to $400, depending on which title company you use. And then on top of that, the listing broker may have a broker flat fee of a couple $100. Usually you can plan for about $500. Now, the seller may have to make certain repairs before closing. Now, this is going to vary depending on the situation and the loan type. If it's a government loan and it's something mandated by FHA or VA, like a handrail or peeling paint, then that repair is going to have to be completed before closing. The best advice for sellers would be to be proactive and make any repairs up front before you put your home on the market. Now, the next expense is going to be prorated taxes. Now, I did a video on how Nebraska calculates your property taxes, and I'll leave a link to the card above. Long story short, property taxes are going to be prorated to the day of closing. That means the seller is going to be responsible up to closing day, and then closing day moving forward, that's going to be the responsibility of the buyer. But keep this in mind that the taxes are going to be prorated. And again, what the title company is going to do for you, they're going to make that determination and make sure those taxes get paid. So the title company is going to take care of that for you, but they're going to calculate that for you. So you may get a credit or a debit based on when the home closes. Now, a lot of times a seller will have a question about their escrow account held at their bank. What's going to happen after the deal closes? Typically, a couple of weeks after the deal closes, you'll get a check from your bank for the balance of your escrow account. And this could amount to a couple $100. What do all of these costs kind of look like when you kind of lay them out there? Let's say you have a purchase price of $300. Let's say the seller had a loan balance or a loan payoff of $120,000. Title insurance was $550. And remember, that was split between buyer and seller. The state documentary tax, that is $2.25 per thousand. That's going to come to $675. The repairs, if any, made up a number for $1,000. And then commission, remember, commission is negotiable. In this case, it was just simply 5%, and that amounts to $15,000. And again, there's an escrow closing fee of $350 and a broker flat fee of $500. So your net to sellers in this example, and every situation is going to be different. In this case, the seller would put in their pocket $161,925. If you want to know more about selling a home, hey, be sure to check out this next video and you make it a great day.